It has been a wild ride with mortgage rates these past few weeks. Our sale prices in Portland are rolling with the punches or taking a hit. Join me as we unravel the latest stats and trends to reveal the pulse of our local real estate market. We had another pretty strong week when it came to the average sale price. It ended up 1% higher than the previous week's already pretty strong number, and compared to last year at this time, the average ended up by 4.3%. Not too bad, but again, keep in mind that this number is indicative of what was going on our market 3 to 6 weeks ago when these purchase contracts were first agreed to by buyers and sellers. Over the next couple of weeks, we should start to see the effects of climbing interest rates and likely some downward pressure on sale prices. Looking at demand, the number of purchase agreements signed by buyers and sellers rebounded by about 18% from last week's kind of low number. It looks and feels like a pretty respectable number. However, we ended up with fewer new purchase agreements compared to last year at this time, only by about 50 deals, but it's significant in that this is the first time that's happened in about 3 months. This is another spot where we might start to see more downward pressure from higher mortgage rates. We might be seeing a troubling trend when it comes to the supply numbers. The number of homes new to the for sale market this last week did moderate just a bit from the previous week's high, but it moderated a lot less than I was expecting. We're definitely seeing more homes hit the market than we were seeing last year at this time. In fact, right now, buyers have almost 40% more homes to choose from compared to last year. But bear in mind that our market sample is for the full metro area, and there are areas, neighborhoods, and different segments of the market that are performing way better than average and others that are struggling. So reach out to me about your specific neck of the woods if you've got a question. The average number of days that a home spent on the market before receiving an acceptable offer came in at 43, only a couple of days higher than last year at this time. The median days on market was 12, meaning that half the homes sold in 12 days or less, and the other half of the homes sold in 12 days or more. That number was 1 higher than last year's number. On average, sellers had to discount about 1.7% off their original asking price in order to secure the successful sale of their home. 2 more areas that will probably see some downward pressure from higher. Speaking of interest rates, I mentioned it's been a rough couple of weeks. We've had about 3 weeks of stronger than expected reports in jobs, production, and consumer spending, leading to higher than expected inflation reports. Fed board members have been talking about keeping rates higher for longer, and it looks like the expected June rate cut is now off the table. The best rate I could find for the 30-year fixed mortgage today was 6.875%, with most lenders well into the mid-sevens, if not more. The yield on the 10-year Treasury, which is one of our best indicators of where mortgage rates are headed, hit the highest numbers we've seen since November of last year, when most lenders were at that 7.5% mark and probably a bit more than that. Well, you crossed the finish line for this week's market roundup. Whether you're in the market to sell or to buy or just feeding your market curiosity, be sure to follow and subscribe to arm yourself with prime real estate knowledge and stay ahead of the curve. Catch you same time and same place next week where the latest stats and trends await.